It is the CIFN midday update here for a Monday and sponsored by Integrated Seed Solutions over in Flanagan. The sun's shining, starting off the week, and looks like markets trying to get a little higher. Merrill Crowley joins us here, Ag Trader Talk over in Watseka. Merrill, what's going on right now?
No, it's a beautiful day out. I guess I was doing some thinking this morning, so I might be way off base with this stuff. Where's our $10 corn and $20 beans? Earlier in the year, prices were a few analysts were promising us, but China is the only one that has $10 corn and $24 beans. For one thing, year is not over. The August report last year was the start of a big move we saw this year, and that report's only 10 days away. For some reason, this year's acreage has been counter historic trends. High prices did not expand this year's acreage as they have in the past. However, we won't know the reported acreage until later this year, probably after the September 12th report. We will know the production decline due to our weather and western drought. I don't know if we'll know it or not. Interesting enough, we won't know the August report either. Why? Well, the August report does have farmer surveys, but the USDA is also going to add condition models, satellite imagery, and NASS field office input. Regardless of the outcome, farmer surveys will be where the responsibility for the number will lie, just like they did for acreage. Acreage numbers from the FS office won't be reported until after the September report. Ask yourself, have we had a bearish report since the August 2021 report? The 2020 report last year was the low. It seems almost impossible for USDA to increase national corn yield above 179.5. Soybeans have yielded higher than the 50.8 BPA that the USDA has projected, but the condition rating for soybeans only 58% good to excellent. Conditions for soybeans the first week of August in 2003 were 63% good to excellent. By September 1st, they were 43%. Conditions for corn were 67% and dropped to 47%. The soybean yields that year were the third year in a row lowest. The corn was the highest in 3 years. So conditions reports are unreliable as far as what kind of acreage we're going to see. My point is you can't rely on the condition reports, yet condition models are what the USDA is going to use in addition to farmer surveys to tell us what our production estimate is supposed to be. With the current price and projected lows, most farmers are taking the attitude we don't need any risk management. Prices could decline 50 cents for corn and $1 for beans, and farmers will still have a profitable year. And I can't argue with that. Support is there. There's good support in these markets, probably $4.50 at the lowest, maybe $12.50 for beans at the lowest. So most farmers are willing to wait, especially after seeing what prices did after last year. And we won't know whether that's a good idea or not until after the report and basically when the combines get ready. As far as actual facts, today's corn exports was 54.48 million bushel, soybeans 6.66, and wheat 14.25 million bushels for export shipments. The rating for hard red spring wheat is expected to be up 3% to 12. Corn rating is expected to be steady to 2% lower, 64% last week. Soybean rating steady to 1% lower with 58% last week. Futures trading involves, before we quit, we probably ought to look at the board. Okay, I've got SEP corn trading at 553 3/4, up 6 3/4. I got D's corn 554 1/2, up 9 1/4. They have been higher, but they are ranging right now toward the high side. Wheat is up 19 3/4 for SEP at 723 1/2 and 20 1/2 for D wheat at 733 1/4. Wheat's being pushed by the crop ratings and the crop yields that we have for the spring wheat, the white spring wheat. And right now, we are, according to FOB numbers, comparing different countries, we are the highest priced country in the US or in the world with wheat. Corn is probably the lowest price right now. So seeing corn move up higher is not out of line, at least in the world picture. Soybeans is a kind of an interesting setup in the world picture. Our beans are more expensive than Argentina, yet cheaper than Brazil's. Brazil does have beans, so it's probably we're in between. Let's just leave it at that. However, when you look at the oil and when you look at the meal, we are higher than both Brazil and Argentina. So it's kind of an interesting setup there. That would suggest that corn has the most area to rally, and that's going to be dependent on what kind of demand appears as we move into the harvest. I don't think people are going to be too interested in getting too much in a hurry with demand because we got the glut of harvest coming. Usually we have lows. Will we have them this year? I can't tell for sure. So that's about all I have today.
Looking at one of the farm publications in the mail this morning, the headline, record high input prices coming, if not already here. That's another thing
Yeah,
to keep in
yeah.
mind.
Was I reading potash prices went from, I think, somewhere around 100 something to 500 something. And that was not retail, that was wholesale. We've seen China cancel sales to India and another country. I'm trying to think of who else, can't remember, but they were two large countries as far as canceling any potash or any other fertilizers. And you say, well, that doesn't hurt us. It will, because now we'll have India and this other country in the market trying to compete to get the products they need because China canceled out on their supplies. Yeah, you're right, Ken. That's a big question, what our inputs are going to be next year.
Just hope they don't get real high and the prices drop real low. That's always a bad combination.
Well, if we were to have the right conditions fall in place, and South America is dry. If they stay dry, they won't be producing much of a crop down there, even though they're going to put what 4 million metric, I can't think of 4 million hectares more, or 4% more, I believe it was, to their soybean acreage. And so they should have a lot of beans, but if it's dry like it has been and stays that way, that sets up a situation for prices to get back to maybe 10 and 20, maybe even higher. But that's somewhere down the road, which may or may not occur. Right now, I guess it would be a surprise if we don't have a bullish report for August. I just don't know how much fact you can put with it.
And again, that's coming up here August 12th, a little over a week away.
Yes. Thursday, I believe. Yep, Thursday.
How can they reach you and follow you for more information, Merrill?
815-432-2220.
And do you have a parting statement for us here today to give us? Or I should say a disclaimer?
Oh, yeah, I do have the disclaimer. I have to go. Thank you. Futures trading involves risk. Past performance is not indicative of future performance. Any investment in commodities can be risky.
All right. Well, thank you, Merrill. Have a great rest of your Monday. We'll talk to you next week.
All right.
All right. Merrill Crowley there on the CIFN Midday Update, again sponsored by Integrated Seed Solutions in Flanagan.